Boom. What's up, you guys? It's Royce Jacob, and welcome back to the channel. Warren Buffett, the Oracle of Omaha, the man many regard to be the best investor alive, and maybe even the best investor of all time, cannot stop selling his Apple stock. And personally, I love to see it because, as many of you know, I'm currently shorting Apple. So, Warren Buffett runs a very successful hedge fund by the name of Berkshire Hathaway, who just released their Q3 earnings report. And in this report, announced that they sold 25% of their Apple stock in that quarter after selling a whole bunch over the first half of this year. Again, I say this in every Apple video. I love Apple. I'm recording this on a Mac desktop. I have a MacBook Pro right in front of me. I have like 4 iPhones for me and my family. I've been an iPhone user for the past 10 years. I've been a MacBook Pro user for the past 10 years. I have a bunch of AirPods, Apple Watch. I'm not trying to flex. I'm literally just trying to say that I'm an Apple fanboy. I love Apple. I believe they make the best tech products on the planet. But there's a very big difference between loving a product and being bullish on the stock. Apple stock is currently trading at a price to earnings ratio, or a PE ratio, of 37. Okay? A historically fair, or a historically generous, I should say, PE ratio for a company, the largest company in the world, or any company of the S&P 500 for that matter, is 20. Okay, 15 is considered healthy, 25 is considered super generous, and right now Apple is sitting at 37. Okay, a 37 PE ratio with the earnings report that Apple just presented, which we'll go over a bit of today. We're not going to go super in depth on this. You guys can always look into it if you want. But Apple's earnings report is not displaying a 37 forward PE ratio type of growth. We are not seeing the year-over-year percentage gains that you'd want to see from a company trading at this valuation, especially not one with a $3.4 trillion market cap. And I'm sure that is why Warren Buffett is selling. So it's kind of a long intro, but in this video, we're going to talk about this. I want to talk about why Warren Buffett is selling. It doesn't go into exactly why he personally is making the choice. The decision to sell, it isn't even necessarily just his choice. Berkshire Hathaway, once again, a multi-billion dollar enterprise, a large hedge fund, publicly traded. There are many other individuals who likely have a say in this, so it's not just Buffett. It makes for a good headline, but we'll go into why Berkshire is offloading their Apple shares, why there may be something, there probably is something that they know that the average Joe may not. And I want to talk, of course, about how far I think Apple stock can fall in the week ahead, in the month ahead, prior to the new year. Because, again, as many of you know, if you're trading along with me, if you're part of the newsletter portfolio group, first link in the description. If you're not, $15 a month, then you would know that Apple has been in my put portfolio, the primary put holding short position in the Waves portfolio for quite a while. It's been doing us well, and I think it will continue to do us well, especially as we kick off the week ahead. Now that investors are reading all of these headlines, and probably gonna, hopefully for us, so we have some put profits to buy up, some Palantir riot calls with. Hopefully we get some selling by Apple shareholders with the knowledge that all these headlines are just taking over the weekend. Okay, so once again, before we get into some of this news and of course talk price targets for Apple, if you guys want to join Waves Capital for real, if you want to know exactly how I'm personally trading my portfolio on a daily basis and receive all of my daily trade alerts and comprehensive trade analysis newsletters, first link in the description. $15 a month, $40 for every 3 months, completely up to you if you want to join, obviously. But if you do, welcome to the winning team. We've had a couple of great months, and I really feel like we're going to be closing out the year with a bang. So if you want to join the winning team, it's the first link in the description. If you are a member, as always, you the best. I appreciate you. And, a little bit of commentary down below discussing your experience there, because I'm proud to say that I think for the most part it's unanimously positive. Goes a long way for prospective members. So, a little testimonial really helps. Appreciate you if you're a member. Appreciate you if you sign up. If not, I appreciate you for watching this video. So let's get into it. Okay. You can read the title. You've probably been reading it. Let's just go into some of this. Okay. This is all I'm going to read. You guys can go read this for yourselves if you'd like to dig deeper. But Warren Buffett sold another big chunk of his Apple stake, downsizing Berkshire Hathaway's biggest equity holding for 4 quarters in a row. The Omaha-based conglomerate held 69.9 billion worth of Apple shares at the end of September, according to its third quarter earnings report released Saturday morning. That implied Buffett offloaded approximately a quarter of his stake, with about 300 million shares remaining in the holding. In total, the stake is down 67.2% from the end of the third quarter last year. The Oracle of Omaha started trimming his stake in the iPhone maker in the fourth quarter of 23 and ramped up selling in the second quarter when he surprisingly dumped nearly half of his bet. Okay, Warren Buffett, again, the Oracle of Omaha, isn't notorious for being the best trader of all time, the best investor of all time, trader or slash investor, I guess, for not having his finger on the pulse of what's going on. If Warren Buffett is selling, that's probably a pretty damn good inclination that the business is slowing down, or that he doesn't see more upside for the stock, okay? In this environment, once again, all things considered, let's just go over this, okay? And then we'll get into Apple and talk about why I think Apple isn't only overvalued, but the technicals imply a pretty generous pullback for put holders, at least. Okay, generous for the bears, definitely not good for the bulls. Okay, so here is the main thing that I think a lot of individuals, Apple investors, those who are bullish on Apple and long-term holders of Apple, are going to be a bit worried about. Okay, and it's the services revenue. This is amazing. Okay, so services revenue, 25 billion, 24.97 bill versus 25.28 bill estimated. Okay, this is what many have been praising to be the bread and butter of Apple's growth story, right? And if we're seeing that slow down, and it didn't necessarily slow down, but it's not moving at the pace at which many analysts believe it to be, that isn't good for the stock. Okay, so that's the highlight here. Again, you guys can go dig deeper into this earnings report if you want. Personally, I liked what I saw. Apple actually, as far as iPhones are concerned, did way better than I expected to. So I'll give, again, my favorite tech company who makes my favorite products, credit for that. But again, it's the valuation. It's this 37 PE ratio. It's the fact that Apple is up so significantly on the year while growth is objectively slowing down, and really not even slowing down, but not moving at the pace at which many believe it to be. Again, the Apple bulls believe Apple to be a growth stock still, and Apple, the reality is Apple is definitely not a hyperscaler. It's definitely not a high growth stock. It's a good company. It's a great company, but it's not a growth stock, and it's trading with the multiples of growth stock. Okay, that is my issue. Love Apple products, don't like AAPL. Okay, so before I go into anything at all, it's important to remember, before I get technical at all, I should say, it's important to remember that in April of this year, May of this year, Apple was trading below 170, okay? Apple was sitting at $1.64 on April 19th, okay? That's crazy, okay? And again, we've seen a pullback this past week, but just to put things into perspective, it's once again important to realize that we're still significantly up on the year and significantly up from the lows on the year, okay? For like where we're at now, let's get a price range here from this low right here to where we're sitting now. We're still up 36% from the low we saw back in April, okay? Just to put into perspective and make my final downside target that we could potentially see by the end of the year make a little more sense. But let's talk short term, okay? Apple's earnings came in, stock sold off a little bit, and I think, as I implied earlier, that these headlines will catalyze a sell-off in the stock going into the beginning of this week. Time will tell. I could be completely wrong. Maybe Apple rips. But just, again, as a betting man, I would bet that the fortune favors the bears as far as the short term is concerned. Short term, my target range that I've been talking about for quite a while stands. I do think 218 at the very least is likely. That would imply at least a 2 to 2.5% move down from where we're sitting at currently at the time of recording on Sunday, November 3rd. Yeah, pretty sure today's November 3rd. Sundays, weekends don't count. From there, it's going to be the bottom end of this shorter term megaphone channel. If we do see that, say, by the end of this week, that would take us down at least 3.5% to 215. But again, I think Apple is just overdue for a meaningful correction. Again, if these numbers sound crazy, just reference this price range and date range that I have right here. Apple fell. Apple fell 15% in 29 days. And even more, if you guys remember the beginning of August, Apple fell from 225 to 196 in 1 day. I'm sorry, in 2 days. Okay. That's insane. Okay. So Apple fell almost like 13% in 2 days, which is just insane to think once again. And if you're thinking like, wow, a 15% sell-off over the course of a couple of weeks, if we talk about this, my final price target, which is over here, like 13 to 14% in a couple of weeks, seems crazy. Just remember that much crazier things have happened. Apple has climbed also amazingly earlier this year. And although Apple is a $3.4 trillion company, it's entirely possible to see price action like this, especially considering there's been so much long call volume on here, okay? As far as call options are concerned, as far as options contracts are concerned, the longs so heavily outweigh the puts with Apple that it can create the opposite of what is notoriously known as a short squeeze, and that is a long squeeze. So when there are so many longs on a stock, when it starts selling off, those longs have to cover their asses by selling stock, and that in turn creates a snowball effect lower, and that's what I think could happen with Apple. And especially that's, again, why put options can be so lucrative with Apple, is because the sell-off of great magnitude is unexpected. So the volatility aspect of it is surprising, and when you're trading options, that's good news. That may sound a little funky, what I did that whole past minute, but if you've been trading options for any meaningful amount of time, I'm sure you get what I'm saying. Regardless, as far as downside price targets go, from here, if we do break below, 206, 208, just kind of this level of support that's come into play a couple of times, or just this historical ceiling and floor for Apple that's come into play over the past few months, then I do think that this line of broken resistance will come into play as new support. And to be honest, I think this is likelier than not by mid-November. Over the next 2 weeks, I do think Apple could fall another 13 to 15% to retest this line of broken resistance as new support. That would take us below 200, could take us as low as 190, but as far as my puts are concerned, as far as trading is concerned, I would definitely look to take profits and potentially just close out the entirety of my position by 195. Now, if things get real bloody, let's zoom out here. Apple is in a very long-term ascending channel. Boom, boom, creating the line of resistance. Boom, boom, creating the line of support on this macro ascending channel. I'm sorry, this looks kind of jumbled up, but if we do ultimately come down to test the line of support on this long-term ascending channel, let's just say by December 1st, by the end of November, that would take us all the way down to $1.85 or 17% pullback from current levels. Now, is that likely? That's pretty bearish. That's optimistic if you are a bear. Is it possible? Absolutely. Remember, we came so far from those lows in April. Apple's slowing down. The consumer is slowing down. I personally think that this holiday season is going to be soft. And I wouldn't be surprised at all if we see some signs of that once the actual once more iPhone numbers come out and once more iPad, MacBook, numbers come out. 15 to 20% by 2025. Don't see it out of the realm of possibility at all. And I'm actually betting on it. So again, if you want to trade with me, if you want to know how this week plays out, if you want to know what I do with all these put profits, it's the first link in the description of this video. Appreciate it if you join once again. If not, no worries. I hope you gain some value from this. Let me know what you think. Let me know if you think Warren Buffett and myself, to put both of those in the same sentence, are in the right direction, or in the right, have an argument for selling Apple, or let me know if you're bullish on Apple and if you think I'm full of crap. So again, appreciate you watching. I'll catch you in the next one. Until then, always remember, take action, make waves. Peace.